Hello friends, this is CA.SP.Palaniappan here to give you the key highlights of the direct tax proposals of Budget 2021. Well, Budget 2021 was the most sought after event this year, especially because of the COVID crisis in the last year, and all of us were looking up to the government as to what they would do in this budget to revive the economy, which was on a downturn. Well, how has the budget fared? Well, the markets have cheered it. The Sensex was up about 2,300 points. So I guess there is weight in this budget, and we'll have to wait and see as to how it is being implemented and how that affects our economy. And hopefully everything will go well. So now let's move on to the direct tax proposals. Once the budget is tabled, the first question in every common man's mind is there any change in the tax slab? Has the exemption limit increased? These are the basic questions that first come from any common person when the budget is released. And I'm sorry, there is no change this year in the tax slabs. There has been no increase in exemptions. The tax slabs remain the same as per last year, and we are left with the same confusion as to choose between the old regime or the new regime. Either we can select the old regime where we enjoyed the exemptions under ATC or your HRA or your housing loan deductions, or choose the new regime which had about 7 tax slabs with lower rates of tax, but however 70 exemptions were withdrawn. So we'll still have to work out which tax regime works better for us and pick that. However, we should be happy this time that there was no change in the tax slab, because what was expected was an increase in tax slab. Especially there was something called a COVID cess which is speculated to be introduced. But thank God nothing of that sort was introduced. So now let's move over to the new exemption that has been given in this budget relating to the senior citizens and the exemption given to them for not filing their return of income. So these are a specified group of senior citizens, those who are 75 years and above, and those who have only income from pension and interest income from bank. Only these senior citizens are eligible for this exemption. So if you fall under this category, are you not required to pay taxes? No. You are only exempt from filing the return of income. However, these taxes will be deducted by the bank who is going to pay you the pension and the interest. The compliance aspect of filing the returns alone are exempt for these resident specified senior citizens who are 75 years and above of age. The next relief given in this budget for salaried taxpayers is leave travel concession cash scheme. So basically the government did understand that a lot of people would not be able to avail this leave travel concession benefit because of the COVID crisis. So if you were to travel with your family to places within India, then you were to take a deduction under this leave travel concession scheme. But due to COVID, a lot of us were not able to travel. So now the government has come up with this cash scheme where we can take the deduction of this leave travel concession if we spend that same amount on goods and services, any goods and services, for an amount of 3 times the leave travel concession that was available to us. The only condition is that it should be in digital mode. We cannot spend in cash and give them bills. We have to spend it through either cross checks or net transfers or maybe even your Google Pay. So if we are to do that, we can claim deduction under this leave travel concession cash scheme. We will have to provide the bills to our employers and they will give us the deduction. The deduction is restricted to a maximum of 36,000. So now let's go on to the next major change in this budget 2021. As all of you know, through the last year's budget, dividend became taxable in the hands of the SSC. So any amount that was received by us as dividend, we would have to pay tax on it at our normal tax rates. But however, an assessee would not know with certainty as to when he would receive the dividend and how much he would receive the dividend. So it was a little unjust to ask the assessee to pay advance tax on the approximate dividend he would receive for the full year because it was uncertain. Hence, the government has now relaxed the advance tax clause. Now, the advance tax clause and interest under 234C will not apply for dividend that is to be expected or received. Only after the dividend is received, we need to pay advance tax for it. Let's say I have not received dividend for the entire 9 months. From April to December, I need not pay advance tax on it. And if I receive a dividend of 1 lakh in the month of January, then I will have to pay advance tax only in the last quarter. So that has been a welcome change that has been brought in by Budget 2021. Now finally, let's move on to a change that is not so welcome. I'm sure which will create hardship for both the tax professional as well as the assessee. The due date for filing belated returns and revised returns in the Act has been changed, has been decreased by 3 months. For assessment year 21-22, the usual regular date for filing the return, as all of you know, is 31st July 2021. Earlier, as per the earlier provisions, the due date for filing belated returns for assessment year 21-22 will be 31st March 22. But however, now they have reduced 3 months and now they are saying belated and revised returns can be filed only till 31st December 2021. Which means what? We have only 9 months time from April to file our belated or revised returns. I am not sure what the reasoning behind this reduction in time limit is, but I am sure that this will cause a little bit of hardship to both the assessee and the tax professional. Thank you so much for watching. I will try to give you more updates on the budget and other direct tax items.